let's quickly run through what just happened this week, third week of January 2023 in the market. So, looking at my chart now, you notice something. I zeroed in on something, and that's the New York session. So this line here, this is the open of the New York session, and this line here is the close of London session. Now, within this time frame, I love the New York session, and I love trading the New York session. Now, within this time frame, one thing I do for myself is I look for setup within this time frame, and I do my best to keep to what is actually playing out on the market. So if you watch, you're gonna see that after a few minutes after the open of the New York session, we actually had this change of character here. The market ran above this high, and then what does that tell us? That there is a change of price delivery by the algorithms. And if you watch, we have to extend this block. This is the block that sponsored the break of this high. So few pips below here, you place your buy order here. So you got tagged into the trade, and you saw the way the market already. We've noticed a change of character. The market is actually telling us, the algorithm is telling us that they've changed their price delivery, and they're interested in taking out, going for the buys as it stands now. So we quickly run through this level, and we got here. What did you notice? The moment we got here, looking at this, you see some impulsive move up. So you notice certain things occurred here, like the should I say, the usual break and retest pattern that everyone is aware of. Or you can say there's a breaker block, which is equally right. There's a break and retest pattern, and this is the market trying to pull back to fill up these imbalances. So we had a break and retest, we had a retest into a breaker block, and we actually came back to fill up this imbalance. If you watch, this high here aligned with this this should I say, this high here aligned with this low. Looking at it, you see this high here aligned with this low, factoring in your spread and several other things. So this was actually an opportunity for a re-entry, and you'll be targeting maybe the high. If you watch, this line here is the previous daily high. So those are the previous daily high, and remember, you can go through some of my teachings on liquidity. So above this level, there is something existing up here. So it's is a liquidity level, and there are interest on those levels. So I will not be covering that here. So you watch, we'll run through it now. There are, when you take this trade from this very point, there are maybe 2 points you might have your take profit in. You might be targeting this high, as in this high here, or you might be targeting the previous daily high. And what really happened, if you entered here and you targeted here, this is a using you really have, from these very points of entry that you got tagged here to here, you have like a minimum of 1:2. That's a nice risk to reward. And if you had a re-entry here and you are targeting this high, you have a minimum of 1:2. Likewise, your stop loss placed below this guy here that caused this impulsive move. This is the guy, this guy here that initiated this impulsive move. So your stop loss should be below it. Remember, there is no imbalance here, so there is nothing that can attract price to feel. There's nothing, the price is not retracing into any of these level or trying to fill up anything. So your stop loss should be below here, and if the market closes below this, your stop loss, this is an indication that the algorithms are prepared to be going lower. So that being said, this is actually a very nice trade. So both ways, either you entered here or you entered here, you had a minimum of 1:2. And let's see another thing the market did with this week. You're gonna notice that the market actually this same week, the market did something again. Let me, because this is actually my trade journal. One thing I do very well is that I try to keep note of everything the market is actually doing. So I encourage everyone, try to journal your trades. It sharpens the way you monitor things happening in the market. Yeah, it trains your brain to recognize patterns and how fast they are playing out. So I journal my trades and I keep eyes on what happened. So looking at this very place now, okay, let me Okay, this was the last slide. Okay, this one. So looking at this, you see something here. Now, I always love zeroing this London New York session open and this London session close. So every trade I want to should happen between or within the zone. So if you watch here, we had a break below this level. So that's a change of character. What really happened the moment we broke below this level, and this quite a liquidity level or a relative equal low. So we should be targeting this low. And if you watch here, if you actually watch here, zoom in very well, there is an imbalance existing here. What does this mean? Price may retrace into this level. So that imbalance is serving as a magnet, and price actually retraced into it. When price is retraced into it, watch this place again. We had a low here. When price retraced into it, we broke through this low. Watch this crazy displacement and price action, change in price delivery. What happened again? The market went back and filled up this imbalance. What happened again? We broke through this low. What happened again? The market went up, stopped around this breaker block here, and from here we zoomed down, taking out this relative equal low. The moment we got here, after few pips after taking away the equal low, what did we notice? A change of character, change in price delivery. What does that mean? The algorithms are prepared to run higher. Now, what do I do when I notice a change in price delivery? I mark out every possible draw on liquidity, levels that may end up attracting price. Um, I think I did justice to that on one of the videos on liquidity, so you can go watch that. I had to mark out levels, possible levels that price may approach. And if you watch the way after this change of character that occurred here, this is a very impulsive move up. You see this imbalance here. You see this other block here. See this imbalance. We came back, we filled it. Just watch. If you do this day in, day out, you journal your trades, it sharpens your understanding of price delivery, price action. You as it's playing out on the market, your brain processes it very, very fast. So that being said, let's jump into the next slide. So this is what happened on Wednesday 18th of January 2023. So this New York session open and this London session close. Every trade I'm looking for should be within the zone. So that's how I trade. So what happened? The market ran above this high, and within the New York session, when within the New York session window, we noticed something, a run below, which is a displacement, a run below this level. Now you take a look at this run below this level. We had this imbalance here, and remember, imbalance serves as a magnet. It will attract price into its back. So the market actually ran up, filled up this imbalance, and this actually, if you after this displacement, we should wait for the filling of imbalance. So we got filled here, and the inefficient price move was being made efficient. So from here we run down, and this is a very, very massive run of pips. If you watch around this zone, this is a fresh zone the market has not tapped into. So uh for me, I think I left around either here or here. I can't tell again, but I think I marked out every possible level, that price, every possible draw on liquidity. Now, the best way to trade is you must not get everything on the table. That's just the truth. Yes, you may not be able to exist the maximum pip move, but before you take a trade, two things you must determine: your stop loss level and your take profit level. Every trade I find myself in, I always make sure that every trade I find myself on, I always make sure that my risk to reward is always 1:2 minimum. Yeah, my risk to reward is always 1:2, to make sure in case I find myself in a loss, I should come back better. Yeah, it aids the way you come back from a loss. And just target 1:2 minimum, but at least something that is achievable over time will still be that 1:2. 1:3, 1:4. That's quite, but I don't encourage people to be shooting for those extreme high peeps. 1:5, 1:10, or one is no, 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 no. Do something that is consistent, achievable, and will be repeated with ease, time and time and time again. So let's quickly run over to this next slide, and this is the 5 minute representation of what we just saw on the 1 minute. You see really what happened. This is the within the New York session. This is where I'm interested in taking my trade. Anything that happens before this point is none of my business. We went up, we came down, and on the 1 minute, you see the way the price delivery is so excellent on the 1 minute. So whether you are using the 1 minute, the 5 minutes, the 3 minutes, any time frame you want to see, but actually make sure you are comfortable with the psychology that comes with trading on those time frames, the quick decisions, and so on. And not just that, your ability to having journal trade time and time again. You should be able to process what you are seeing on your screen as fast as possible without making any error. Yeah, that's why if you actually, they say trade like a robot, trade without feelings, and be very fast. Yeah, so if you watch it, is a 5 minute representation of what we just on the 1 minute. It's still the same thing. Now, this is the first zone I was talking about. If you watch, this zone has some imbalance on it, and this imbalance definitely will serve as a magnet to price. It's a draw. It will still attract price into it. So this is quite a big and a massive move. So if you watch, this is my MT5. These were the trades that really I took that day from this very point to here. And when we got back into here, from here, I traveled all the way down. So if you watch this relative equal low here, the moment we got below it, I knew that at least this trade here, when I entered around here, my stop loss was around up here. Why? See this imbalance, the way we filled it. The moment we feel this imbalance here, we broke through this level here. I knew that it's good to sell. So I sold from here, and this offered me like either 1:4 or 1:3 risks to reward. That's why I tell you, it's not in the number of pips. Yes, some persons may make 60 pips, but they risked 40 pips to make that 60 pips. Some persons may make 20 pips, but they risked 5 pips to make the 20 pips. Yes, that is 1:4. But someone that had 60 pips and you are risking 40 pips to make 60 pips, your trade is less than 1:2. So what do you think will happen in a case of repeated losses? It will quickly eat into your profit, and you wouldn't have much things to show for it. Now, let's jump into the next one. So this trade, I think this is on the 20th. If you watch, I just showed us. So the way we just, from this very point, um this very place is a nice draw on liquidity price. I know a price definitely will get to this very level, and I was entering around here, and I was entering around here, though I think I took a loss or so around this very zone, because the market did something on the 1 minute that actually caught up with me. So but I bought around here, and sold here, then bought again here, and I sold here. When we do trades there, I sold here. I always make sure that my trades are within the range of 1:2 minimum. 1:2 minimum. I always have eyes placed on my risk to reward. Yes. I tell people it doesn't matter the concept you are using as a trader, whether you are, it doesn't matter the way you approach the market. When your risk management and your trading psychology is not in place, you will struggle all through. You will struggle all through, and with time you will quit trading by your own. So if you watch all the levels I had marked out here, these are levels I knew that price action may end up stepping into. But within all those things, we don't know where they will reverse. We just determine what we want, what we are risking, and how we decide to pay ourselves. Now, paying ourselves is the reward. The risk is what we want to put in to see how the market plays. That's it all. So at this very, very point, I think this is all. I encourage you to go to your charts, replay, watch, journal, fix yourself up for the coming week. and see the way things will be turning out for you gradually if you are consistent enough. Put in the practice, see this thing as a business, and do the best you can.